Hello, my name is CPA Aringo Frederick, one of the managing partner at Arili and Associates. So Arili and Associates is, of course, one of our accounting firm located in Nairobi. And our today's training, I want to guide you on how to file capital gain tax. I know it's not a common tax that you normally interact with, but it will be important for us to know how can we file the capital gain tax. Also, there's another important, of course, tax that was introduced just the other day, and that is, of course, with effect from September 2023. These are tax that we more refer to as a digital asset tax. So these are the two forms of tax that I want to train you on how you can always tend to file the same. So we go straight to our Itax account so that you can see how we file them. This is our Itax account. So on the Itax account, where you need to go is under payments, you see? So you need to go to payments here. And in this case, you click what? Payment registration. So you just click payment registration. You click payment registration. So once you have clicked, of course, our payment registration, this is a point where we'll be. So of course, as always, the next procedure you do is to click next. So we just click next button. Then from that area, you find that then we come to this segment. So one thing that we need to understand is that anytime you're talking about the capital gain tax, this is an income tax. So all that will be required to do is to come and click, of course, this is an income tax. So once you've clicked your income tax, you come and select the form of tax that you're dealing with. At this point is the CGT. So you select the capital gain tax. So once you have selected the capital gain tax, of course, the rest of the items will be easy. At this point, you need to ask yourself or look at the type of property that you're transferring. Depending with what you're transferring is what will determine what you're going to fill in here. Say if you go to this tab, click this drop down, you'll find that these are the forms of course, types of CGT that we'll be having. We do have CGT1, that is for land and buildings. We do have CGT2, of course, P, that is for land. Talk about in buildings, and you're talking about partnership. We have the one for shares. You see, so all these are the types of CGT that we are looking at. Say, for example, at this point, we are transferring land and buildings. So all you need to do is to click land and buildings. Once you've done that, then, of course, the first part will have cleared it. So now, in this case, these are what you need to check. So basically, these are what we'll be having at this point. You'll find that we'll be talking about we've selected the capital gain tax, land and buildings, that is what we've selected, and the income tax, we have selected capital gain. So you'll find that what you need to do is to fill in now these details, okay? So filling in the details, like number one, talk about, of course, the payment registration. Under payment registration, all that will be required to fill in, of course, will include the PIN of the transferor, talk about transferor name, of course, you're having the land registration number. Say, for example, maybe you're having LR number. Say, talk about assuming this is the LR number that you're having, the date of transfer. When are you doing this transfer? Maybe you're doing this transfer, say, like September. So date of transfer, first of all, you have to insert the year of purchase, of course. Maybe you purchase this item in 2016. Date of transfer, maybe we're doing, say, like 1st September. So the PIN of the transferor, these are, of course, what will be required to fill in at that point, if at all you're having. which will autofill the transferee name. So when you come to, of course, owner's details, then these are what will always be required to fill in: the PIN of the owner, owner's name, owner's loss brought forward, if at all there is any. Then the most important area which I want to guide us, because all these are personal details which you can always tend to, of course, get from, of course, the persons who are doing this transfer. So most important is on the transfer value. And the transfer value, we have to understand that anytime you are talking about transfer value, all we are looking at is simply the sales proceeds, okay? You deduct any incidental costs. Before you sell this item, what are the costs that you incurred? Of course, probably there was advertisement cost. Maybe there was agent cost. Maybe there was, say, like legal fees that you paid before you maybe sell this item. So all these are the incidental costs that you're talking about, which are going to be deducted. So in this case, assuming maybe this asset we purchased, let's say like at 20 million. Purchasing this asset at 20 million, I want you to observe what will be happening here, okay? So this asset maybe we purchased at 20 million, and before purchase, maybe I paid an agent. So we paid an agent a value of say like 500,000. If you click add, you want to add yes, see what is happening here. You keenly observe, you realize that my value is decreasing, right? Maybe you have another cost, say like legal fees. Maybe legal fees you paid, say like 1 million. So the moment you add and you do okay, observe what is happening here. Our transfer value is reducing, and that's why guided and of course guided us that anytime you hear about under transfer value, incidental cost will always be deducted. Okay, then come to adjusted cost. Looking at adjusted cost, simply we are looking at the cost of acquisition. You add any component of incidental cost that you incurred, and in this case you do what? You deduct any form of capital allowances that you'll be having. So we'll also be talking about maybe all these costs. Yeah, we've talked about the acquisition or construction. You can talk about the incidental now. Maybe throughout the period, there are some legal costs that you incurred even before you acquire the property. We could talk about, say, like agent fees that you have to pay. See, so all the incidental costs, literally the costs associated with this asset on purchase. So at this point, maybe assuming you purchase this asset at 10 million, right? So this is at 10 million. So assuming you purchase this asset at 10 million, and allowances that you incurred through the period of this asset maybe was 2 million, which has to be deducted, of course. Under this case, you're having maybe the incidental cost that you incurred, say like legal cost on acquisition. Maybe you incurred, say like 1.5. Maybe these agent fees that you incurred. Agent fees of say like 200,000. You add. So you come and determine all these costs that you incurred, the incidental cost. So once determined, you realize that what will happen here, your net adjusted cost will be affected, meaning that from the initial cost of 10 million, considering all these costs that you incurred here, considering of course all the costs that was incurred, you'll find that as at the end of the day, we are going to get what? We are going to get the 9.7. See? So that will be our adjusted cost. Now we have to determine the capital gain. So capital gain is simply the difference between the transfer value minus the adjusted cost. which in this case, all you need to do is to come to the summary part. On the summary part, you'll find that the capital gain will compute automatically, where you're talking about the transfer value of 18.5 less adjusted cost of 9.7. That would give us a difference of 8.8 to be our capital gain. So it is this capital gain that has to be subjected for capital gain tax, which is a CGT, at the rate of 15%, which has to be taken care of at this point. See? So in that case, of course, the details will appear after we had filled in all the details under the owners and the transfer details. That is when, of course, we'll be having it at this point. Then all we need to do is to simply select the day, whatever or how we want to pay for this. That is other payments and or RTGS. We input it at that point. Then after that, you are good to go with your capital gain. You're good to go with your capital. So then, yeah, that's it. You'll find that filing capital gain tax is as quite as easy as that. Just following the procedures right, and simply you are good to go. So in the event that, of course, you are in need of any tax advice also with this regime of ours, I know there are so many things that you need to align yourself with. In this case, of course, we can help you when it comes to matters to do with your tax audit. Of course, we can help you when it comes to matters to do with your tax health check. In the event that you need any of our assistance, don't hesitate to reach us. We are Arid and Associates. You can check our website out. That is ariledassociates.com, so that you can get all the details and what we offer there. So that point, thank you so much for following the video. And I believe you've learned something on how to file your capital gain tax. Thank you so much. See you in our next video. I'm going to guide you on the digital asset tax. Bye-bye.